The rand trading around 761 at the moment, but yesterday this time we had the rand strengthening quite nicely to just above 750, and that really came on the back of that CPI data. The market's view on that CPI number?
Yeah, the CPI coming in pretty much in line with expectations. Once again, 4.6% down from 4.8. It is a lower number, but it is largely in line with expectations. The market, by price behavior, was expecting it to come in a little bit lower even. So the actual price activity, market interest rate, the FRAs moved up a couple of ticks as a result after that. So I think we're seeing, the market is expecting the CPI to come in lower over the next month or so, but it is still tempered by some concerns. So a lower number, yes, but not not enough at the moment to change perhaps the MPC's decision on interest rates in the short term.
And of course, until yesterday, there was expectations if that number came in better than expected rather than in line, that it would really push the Reserve Bank's hand on interest rates. What's the market pricing in at this stage? Because of course, we've also had those very poor employment numbers out earlier this week that showed 79,000 jobs were lost in the first quarter of the year. Of course, we had Finance Minister Pravin Gordhan saying that unemployment was very disappointing at this stage.
Yeah, that's right. I mean, unemployment, I think, is going to be the deciding factor on interest rates probably at the moment. I mean, the expectations, we're in the middle of the band at around 4.5% at the moment. So, but I think the real concern is those high levels of unemployment, around 25%, one of the highest in the world. So, yeah, I think the timing of that, if we look at what the market is pricing in, it's pricing in more down towards the September meeting, more chance of a 50 basis point cut. It's pricing in a 50% chance of that cut, a less likelihood in July, probably as a result of the World Cup muddying the waters a little bit with the data that's going to come out. Perhaps get that out of the way, but I think the employment is going to be a real concern going forward, and that will probably, as you say, force the hand.
And of course, at previous meetings, Reserve Bank Governor Jill Marcus has hinted that Europe's problems could be a cause for cutting interest rates further on. Of course, we know that Europe's sovereign debt problems have expanded. Of course, we had the US Federal Reserve last night also saying that Europe's debt problems were being felt in America.
Yeah, it's the first time really that the US has raised it as a major concern. Previously only commenting that economic recovery should occur regardless of what's occurring in Europe. But now they're really pointing that it is a concern, and the interest rates as a result will need to remain lower for a lot longer, for an extended period of time, in their words. So I'm certain that our own Monetary Policy Committee will be looking at that, at the international view on those debt levels, and perhaps yet another reason that they could look to move on interest rates.
In the meantime, we've also had producer price inflation being released in the local market about half an hour ago, up 6.8% in May from 5.5% in April. How much do you actually put onto the PPI data at this stage?
Yeah, the market, because of the new basket on PPI, the correlation between the two, between PPI and its feed-through effect to CPI, hasn't really been established accurately at the moment. So the market typically doesn't concentrate or put as much value on the new basket until that correlation and the drag effect has been more confidently established.
Of course, in the meantime, we've seen the rand weakening to 761. We've also seen the yield on the R157 heading up a little bit. Do you think that's been in response to the PPI data?
Probably less as a result of the PPI, perhaps to the current account information that came out a bit earlier today. But it's short-term demand for dollars in the rand market, the rand benefiting from a weaker US dollar overnight. But yeah, the bond market also trading a little bit soft at the moment. I think perhaps more as a lack of liquidity in the market, leading the bond market sort of in a very range-bound state for now. But starting off kind of strong, the 157's around the 790 level and trading up back to around the 796. So it's pretty range-bound for now.
We'll just take a look at that current account deficit, perhaps a little bit more negative than expected, 4.6% for the first quarter. And I think the market was looking for a figure of around 4.3%. How do you interpret that?
That's it, yeah. I mean, it's as a result of greater imports and lower exports. Perhaps less gold has been taken out of the ground and to contribute to those lower export numbers. But the fact that we're still importing, it's not a bad sign. There is still economic activity locally, and as long as that as a percentage is below 6%, it's not a major concern at 4.6.
And of course, that's a good sign, better than what we're seeing in Europe at the moment, isn't it?
That's correct, yeah. That is certainly worth bearing in mind.
James, the rand from these levels, 761, where would you expect it to go? Do you think it'd be pretty range bound for this session as we wait for those durable goods orders out of the United States this afternoon?
Certainly, yeah. I mean, the wide range has been around 50 to 65. I don't see it breaking out of that in the short term.